Alrighty. Yeah, so hope you guys had a great weekend. Interesting week last week. This week should be interesting as well, obviously. But usual disclaimer, do your own research. Everything I'm talking about is just for education. So take it as it comes, but do your own research, obviously, right? For the week ahead, economic events are kind of light. Last week we had a lot of events. This week we have very few. Tomorrow we have the Empire State Index, the NAHB Home Builders Index, the housing starts and building permits on Tuesday. Wednesday will be interesting, the FOMC minutes. Keep an eye on that, 2 p.m. Wednesday. So if you are playing 0 days, which I know Ashish likes to do, keep an eye on that movement at 2 to 2:30 p.m. on Wednesday. Thursday, jobless claims, both regular state program and federal and state, and the Philly Fed Index, also leading economic indicators for July. And then on Friday, we have the market manufacturing PMI flash and the market services PMI flash as well. And then also, obviously, existing home sales. So that'll be an interesting number to look at as well. Friday morning, 10 a.m. So the two big ones are Wednesday, FOMC, 2 p.m., and Friday, 10 a.m., existing home sales, right? So I had some interesting conversations this past few days, I guess, with a few of my, former colleagues, and we've been discussing the issue of inflation. One thing that came up in our conversation was that perhaps we're seeing inflation in an area that often is overlooked, right? When you think of inflation, you think about the price of bread going up or milk or eggs, or energy costs, for example, right? But perhaps what we're seeing is inflation in financial assets, right? And we got to discussing that because we're looking at the issuance of new bonds by Apple last week, right? And it wasn't just Apple that's been issuing bonds. Amazon, Google, Visa, and Chevron also issued bonds at very low rates over the last few weeks. So in discussing that, we were thinking, okay, well, why would these corporations that have a lot of cash on their balance sheets be issuing new bonds to raise funds, right? And the answer is that money is almost free right now. It is so cheap, right? So why not issue bonds, take that money, and if you want to, you can either pay off higher interest debts, or you can buy back your own stock, right? Effectively fueling a snowball to the upside on your stock price, right? And we've seen Apple just climb and climb and climb over the last like 4 or 5 months or so since that bottom in March. And now it's approaching a valuation of about $2 trillion, which is insane considering that their net income. Oh, someone joined and let their mic open. Let me just mute all again. Mute all. There we go. So as I was saying, interesting to note that Apple has almost doubled in value over the last few months, and namely over the past few years, it has more than doubled in value, even though their net income, which is their essential profit, has not gone up substantially. It's actually declined a little bit over the past 2 years, right? But that's just price inflation overall, right? So you look at the fundamentals of the market, and you look at the historical price to earnings ratio on the S&P 500, which is around 15, 16, and now it's nearly double that. It's I think about 27, 28 right now. You get to thinking that perhaps what's happening is that all this money that's being created isn't really going into the economy where it should be going. It's going into the hands of the wealthy. And what that's doing is it's causing them to just park their money in assets like U.S. equities, for example, right? So that was an interesting discussion that I had, and I thought I'd share it with you guys because obviously, I'm pretty bearish overall, but I thought I'd be kind of a contrarian to myself this week and talk about, what would happen if I'm wrong, and perhaps we're seeing massive inflation in the stock market, right? How would you play that, and what would you do to hedge yourself, right? Well, obviously, if inflation is going to occur, and not in the conventional sense of in harder assets like, well, I guess food and energy. But gold and silver obviously are still great hedges against inflation. But the whole idea was that if the market does rise rapidly over the next few years due to hyperinflation in U.S. equities, that would crush any thesis of a sharp drop, right? And again, I'm playing my own devil's advocate here, right? I don't think that we're going to see a dramatic rise, but what if we do? What if I'm wrong, right? So as you can see over here as well, so Apple did 5.5 billion in bonds. They did a 40-year bond as well, which is insane. It matures in 2060, I believe. Amazon did a large offering as well at 130 basis points over treasuries, and Google did 108 basis points over treasuries as well, right? So you can see that this recent trend of corporations that are pretty cash rich reaching out to the debt market and saying, hey, give us some money because it's so cheap, so we can buy back our stock and pay off our higher interest debts if we do have those. That's an interesting observation, right? So keep that in mind when you're making your investments. Perhaps we're going to see a very small number of corporations, namely the mega cap stocks like Google, Facebook, Amazon, Netflix, Microsoft, Apple, Tesla, so on and so forth. Namely, those corporations issue more and more debt and buy back their stocks, right? And we're seeing stock splits now occurring with Apple and Tesla. Tesla announced a 5-to-1 split last week, caused them to rally nicely. That's going to make their shares much more affordable to the average person, right? Because the average person doesn't have, $1,700 or so to go ahead and throw into one share of Tesla. But at a 5-to-1 split, when they go down to, $400 or $500, or sorry, $300 to $400, that will make it much more palatable for the average investor, right? Just some things to think about, obviously, kind of musings, if you will, right? Again, I'm just talking out loud so you guys can kind of think a little bit more broadly based on how someone who's done this for a long time is thinking, right? For the week ahead, we have earnings, not a lot of earnings reports, but we have JD.com tomorrow before open. After close, not too much. Tuesday, we have Walmart and C. C's ticker symbol is SEA, obviously. Keep an eye on those tickers. I know Aaron Collard has been investing in C for a while now. Him and I discussed it back in, I think it was April, when it was trading at like $45, $50 a share. And now it's at like 130-ish and hit a high of 145 a few weeks ago. They're gonna have probably a pretty large movement in either direction. I believe they're expected to move for the week. Let me check it 1 second. SEA. Tell you guys in 1 sec. That's the wrong ticker. 1 second. Where's C? I believe it's 13%, if I'm not mistaken. No, I'll pull it up after. It's not loading on my screen right now. Either way, you have Home Depot, Advanced Auto Parts, and Kohl's as well on Tuesday before open. So a pretty busy day overall in those names. After market close, you have Agilent Technologies. You have Lazy Boy, Cree. Those are some smaller names to look at. Wednesday, you have Target, Lowe's, TJX, and you have Analog Devices as well. After close, you have NVIDIA, which will be the big one for the week, as well as L Brands, the owner of Victoria's Secret. And on Thursday, you have Alibaba in the morning. After close on Thursday, you have Ross Stores, and also GAN, which is a play on the online gambling or sports betting community, right? Last week, DraftKings reported had a poor report, and they fell on Friday about 6%. So keep an eye on GAN. I know some people here do play that. And then Friday before open, we have John Deere, and Foot Locker, right? Foot Locker, I think, is doing decently because a lot of people like to buy their shoes in person instead of online because they want to make sure they fit. So interesting observation there. And then for the SPY weekly analysis, we have a current price of 336.27. So it's just to note for the week overall, it was a very flat week across the indices, right? So NASDAQ, S&P, and Dow, and also the Russell, they were all pretty much flat on the week. So keep that in mind going forward. Current price 336.27, the EM 485, the PM 679, or about 2%. The upper move is 343.06 and the lower move is 329.48. So if we do hit that upper move, that will be a new all-time high on SPY, and that would kind of coincide with my newfound thesis that perhaps we're going to see inflation in the market, and if we are, we should see a continued rise into the end of the year, right? Which means that we should probably see a 3 to 4 percentage point increase over the next couple months, so into like October-ish, even though the election's approaching. Keep that in mind too. And then into year end, a target of around 350, 360. And I think Joel sent me an article as well talking about Goldman Sachs. They had raised their price target on the S&P. Let me find it. I believe it was up to, yeah. So their year-end price target for this year was 360 on SPY, and their 12-month price target is 380, right? So if that transpires, we would see a roughly 22-point move on SPY over the next, I guess September, October, November, December. So 4.5 months roughly, right? And that would mark a percentage increase of about, 338? So about 6.5% to the upside if that transpires. But I also use Goldman Sachs as a contrarian indicator as well, because they're usually behind the curve. And typically when they're calling a market to rally harder, it may sell off, right? So I'm not really confident in what they say. Again, this is all very contradictory, discussion right here, where I'm saying, it might go up, might go down. No one really knows. I know some people are taking straddles and strangles out past November, past the election, because they believe a large move will occur and they don't know which direction it's going to occur, right? So if we're stable for a few more weeks in a row and we don't really go anywhere in the market, that might not be a bad play going into the November election, right? You buy an at-the-money call, an at-the-money put, and whatever way we go, you just hope for a larger move than your overall debit cost, right? So if for example, you spend $5 on a call and $5 on a put, you want to see a $10 move or greater in either direction. You don't care which direction, right? That's the idea behind that strategy. And then if you want to go a little bit riskier, you'd go with a strangle, which is where you buy an out of the money call and out of the money put. We can look at those in a sec on an option chain. So that's SPY for this week. NASDAQ closing price was 270.222. Expected move was 662. And the PM for the week is at 872 or 3.2%. The upper move would be 281 approximately, and the lower move would be 263.50. So again, if we hit that upper move, it's a new all-time high on NASDAQ, right? And expect that to be done with the help of Apple, Facebook, Amazon, so on and so forth, right? The big tech names. Also NVIDIA, obviously, reporting this week could help to push some semi names to the upside. Last week, we saw Micron sell off with Cisco and their poor earning report. So there are certain sectors in the tech segment that, certain segments of the tech sector that are responding weakly right now, namely memory producers and hard drive producers, right? So Western Digital had a terrible report 2 weeks ago. Last week it was Cisco. A few weeks ago we had Intel with a bad report. So there are some names that are being beat up, some of them unfairly so, such as Micron, in my opinion. So keep an eye on MU as well. It's had no love really over the past few months, even with the market recovery, but it may have its day going forward. The Russell has a closing price on Friday of 156.75. The EM was 371. The PM 524. So the upper move is 162 approximately for Friday this week, and the lower move is 151.51. So we're approaching that all-time high in the Russell at 170 area. Again, if we do see the markets, broad markets, push to the upside in a dramatic way, you need to expect that Russell does that as well, right? Because it's kind of difficult for a few names to carry the market, even though they are doing that right now. You want to see some nice bids on small caps, right? For last week, ticker analysis, we had a number of breaches that closed inside the range, right? So we had AMAT, AMD, both of those breached and they closed inside of it. We also had Boeing do that as well. GLD closed outside the range to the downside. So the lower move was 184.09 and it closed at 182.60. So that was a downside breach on gold ETF. We had Microsoft and Netflix both breach but closed inside their ranges as well. Also had, what is this right here? PayPal, Roku, Shopify, and Stamps.com, and also Zoom Meeting. Those all breached but closed inside their range as well. And then we had Royal Caribbean Cruise Lines, Tesla, and Wynn close outside their ranges. So for the week, there were only 4 outside closes, which is pretty good overall if you played every single one of them with a small amount of capital and like roughly 1 to 3 or 1 to 4 asymmetry of risk on risk reward. You would have overall won if you played every single position, obviously, which you couldn't do because some of them don't have liquidity with them, right? But that's a good way to use the EMs and PMs. If they do breach early on the week, look at doing, for example, if a call side breach or the upside breach hits on Monday or Tuesday, look at doing an out of the money credit call spread, or a at the money, for example, put spread, right? The asymmetry of risk is there, the probability of profit is there, and you won't win every single time, but the idea is that statistically, if you take a few bets here and there, you will win over time, right? And again, manage your risk, keep your position sizes small. I know there are some clowns out there that are saying, risk management is putting no more than 20% of your portfolio in one trade. That's ludicrous, right? You want to put no more than like 5%, for example, in any one trade. And I would argue even 2.5%, for example. The larger your portfolio is, the less you need to risk to make a good return, right? Ticker analysis from the week ahead. So you can see them all over here. We have all the big names. Thank you very much again to Frankie. Alibaba, John Deere, Home Depot, NVIDIA, Target, and Walmart are all reporting this week. Frankie had an interesting idea as well. He mentioned to me that he was looking at doing a possible call spread on Walmart if it pushed above 134.11 area, I believe it was, and that would validate a upside move. So I think he was looking at the 135, 140 call spread, which I thought was a pretty good move, depending on the duration. If you go out like a month or two, it might not be a bad move. It could happen this week, right? If Walmart has an upside push to, the upper PM is 138.39, right? It could easily hit that this week, right? My idea for the week, based on what I just said about the inflation occurring in the market, it's a bullish one this week, just for a little bit of contrast instead of being bearish on the market all the time. And again, to give some of you bulls a little bit of fodder, even though I am usually bearish. Looking at NASDAQ and seeing how steep their trend is to the upside, right? And looking at their volatility skew, you can see that the September expiration is trading at a pretty low valuation right now. So the premiums there aren't very high. As you go into November, though, they do skyrocket. So that 30.4% IV is for the November expiration date, the monthly expiration, right? The red line right there is for October, orange is for September, and then obviously the yellow is for August expiration, which is this Friday, of course, which is why the IV is so low. So I would look at the September or October expiration, but looking at the following trade here is a butterfly on triple Q ETF. So you'd buy one October 16th 280 strike call option. You would sell two October 16th 290 strike call options, and then you'd purchase one October 16th, 300 strike call option. So you create a 10 wide butterfly spread. Your net debit would be around $1.55-ish, and your maximum reward, which again, you never hit your maximum gain on butterflies typically. It's very, very rare. It's almost impossible to do that because it requires that the stock price closes on the nose at the middle strike at expiration. At like 4 p.m. or 4:15 p.m. in this case for Triple Q, because they trade till 4 p.m. or 4:15 p.m. rather. So you'd be risking 155 roughly to make 845, but the expected profit would be around $3 to $4. That's what I would expect to make on the position. And again, you're buying out of the money here by about $8, and your asymmetry of risk is pretty good because your delta risk is pretty low overall. Just an idea. I just like to throw out ideas for you guys to look at and help you learn and foster your development. And what better way to do that than to analyze what I'm doing and maybe poke holes in it and maybe come up with better ideas, right? And again, the volume there is pretty low. Liquidity is always going to be great on the index ETFs like SPY, IWM, Triple Q, so on and so forth. But yeah, that's pretty much it for today. Any questions, guys? And also, I think Rick wanted to discuss some of his Heikin Ashi ideas as well. So I'll open up the floor to questions, and then if we want to move on to perhaps Rick, we could do that as well. Any questions, guys? Anyone?
Do a good job of answering them in advance.
Yeah. Well, I was going to look at, I think, what was it, SE, I believe, right? So let me change screens and find that.
What's SE?
It's SEA or C company, right? Ticker is SE. And here's the chart I was mentioning. They report earnings this week. Where is it? Here it is, right? So you can see.
C Limited.
Yeah, they've had a massive run of late. So Aaron mentioned them to me back when they were around 40, like around over here. I think they're like 45-ish. And they just ran and ran and ran. And like, good call by Aaron, like to spot that trade. I believe they're the equivalent of like JD.com, but in South Korea, if I'm not mistaken.
No, they do more games. They do more games.
Oh, they do? Okay. I wasn't aware of that.
No, so it's e-commerce, digital finance service, and they've got 3 separate businesses, Garnia, Shopee, and SeaMonkey. Digital entertainment business, global game developer, and publisher with a presence in Southeast Asia, Taiwan, Latin America, right? So it gives you exposure to 3 different markets, right? Latin America and 2 parts of Asia, right?
Okay.
Access to mobile and personal computing online games, right? Logistics. Yeah. So it's a bag of a lot of different things. And I guess one of the things that probably interests me the most all of a sudden is they offer e-wallet services and payment processing. And we all know everything payment processing right now is super hot.
Yeah, it is. I was looking at the recent disclosures by the large funds, and a lot of the top new ads or like adding to existing positions was around PayPal. I saw PayPal on there numerous times. I don't know if I saw Square on there too much. I wasn't looking for Square, but I did notice PayPal was on many of their ads for the past quarter. Looking at SE for the week, though, as I mentioned earlier, right? And Ashish, appreciate the information on that. I wasn't aware of that. But the EM for the week on SE is approximately, if we can see the 127 strike, which I can't right now. For some reason, it's not showing me that strike. Let's see. No. So based on my estimation, I guess it'd be around $15 in one direction. So upside would be around like 142, and downside would be I guess 112-ish, right? But the liquidity isn't great here, right? That's one thing you're gonna notice is that the open interest is low across the board for the most part. Spreads are very wide. And so typically you want to avoid these kind of trades, right? Because you're gonna incur too much slippage on the trade, which means that your probability of profit is diminished. and also your maximum profit is also diminished as well, right? Which means that you have a higher chance of incurring a loss on the trade. So I'd probably avoid this, but keep an eye on it anyway. It's an interesting thesis overall. There's also Alibaba this week too, right? Alibaba is going to have a
Also to add on CE, ironically, it closed right at the point of control on the 1 week volume profile, right? So it's not lopsided. It's not testing the upper side of price volume, and it's not testing the bottom side of the price value. It's dab smack right in the middle. I mean, to the point of its point of control at, its point of control was 126.80. And it looks like it closed at 126.49, and it drifted a little bit higher after hours. So, you want to see something lopsided so you can play the opposite side of the range, right? It's already extended itself. So then you could say, maybe it pulls back, right, to equilibrium, right?
yeah.
But this is right dab back in the middle. So a lopsided play is a little hard. But it does open up an iron condor, but then the slippage makes it not a wise thing, because now you have double slippage. You have slippage on the put side and you have slippage on the call side. So it's not that I'm encouraging the trade. I agree with you. I would pass on it, but I just want them to see the different things that you should consider before you just jump into it.
Yeah, for sure. No, I totally agree. And slippage is a big issue that a lot of newer option traders face, right? Because they aren't aware of liquidity issues, right? So they just think they have a good idea. They hop into it right away, kind of blindly, I guess, if you will, or oblivious to the liquidity issues present. And that can cause them to incur unnecessary losses, right? That are pretty easy to avoid. I just pretty much don't trade anything that's liquid. I remember, I think it was last year, or the year before, when I worked with Joel, and Joel and I were looking at Biogen, BIIB, and I'll actually pull up the chart to show you what we saw. And it was funny because we literally were talking about it like a week before it actually exploded in price. So I still have it drawn out right over here, right? So Joel and I were discussing this when it was in this range right here, and we said we should go long. I think it was like over here somewhere. We said we should go long. We pulled up the option chain, and there was no liquidity at all. So we said, yep, we're going to forget that whole trade idea. And then what happened? They had some favorable results in, I think, one of their pharmaceutical trials, and stock price exploded from 220-ish up to 310-ish in one day, and then it rose to a high of 350 shortly thereafter, right? But the whole idea was that it was a great idea for a trade. It's just that the liquidity was so poor that any contract we're looking at, the spreads were like too wide, right? So that means that you're going to probably lose $1 on the buy and $1 on the sell, right? Which means you're losing $2 overall before you even have any profit to talk about at all, right?
So let me add to that, if I may. I'm taking your time, but let me add to this.
Yeah, of course.
Think of an illiquid option as like walking on quicksand, right? You'll easily get in. You'll get in, no problem, right? But then you're stuck. You just can't get out. And you'll hear a lot of people go, "Oh, I can't get out," right? You can't get out at any reasonable price because there's nobody on the opposite end who's willing to take you out, right? Because of the spreads. Everybody who's in the chat knows I sell the crap out of shop, right? I sell shop credit spreads on both sides. But the first thing I say is, you just can't get a fill, right? You just put a fill out there and you hope some sucker fills you, right? Way out. And the premiums don't make any sense because when you're doing it in a spread, you get a bit of an arbitrage because the spreads are so wide. But once you're in, you can't get out. You have to wait for it to expire. And since I'm doing credit, it's not a big deal because expiring worthless means it's over. If it's a debit, you're in trouble because if you can't sell it, right, then you're going to have to take possession of it. And that means a lot of money. So think of illiquid options as quicksand, right? Mm-hmm. It doesn't look dangerous. You put your foot in it, you go in, and it's going to take a lot of work for you to get out.
That's a very good metaphor, Ashish. I like that a lot. Well said. Well said. On that note, Rick, do you want to share any Heikin Ashi stuff at all today? If Rick's even there right now, he might not be there. If not, no big deal. Anyone have any questions at all about any trades you're in right now? Any ideas you guys have that you want to review? I mean, it's only been half an hour so far. I'm happy to review for 15 more minutes or so. Anyone at all?
Come on, guys. This is the time where you get to ask. We throw up a chart. We mark it up. Come on. As soon as you leave, you're going to have 10 questions. Throw one out.
Yeah.
It's too loud around here. I can't do that anymore. I'll talk to you
Okay,
guys
just
tomorrow.
Go ahead. Give us the ticker. What ticker are you looking at?
Yeah, I say. What ticker, man?
Jose, type it in the chat. In the Zoom chat. Don't make me go into Discord.
Yeah. Or here, if you want, I'll message you on Discord.
Look at Walmart. What are we thinking about Walmart?
All right.
Come on.
Well, Frankie was discussing that with me, and Frankie had said, let me see what Frankie was saying.
I got a 124,
Nick,
125.
FedEx is the ticket that I'm talking about.
You want to look at FedEx?
Okay.
Yeah.
FedEx, okay. So look at FedEx. Yeah, it's been popping to the upside here. So let's look at FedEx over here, right? So, well, they have a nice big fat gap right there, a nice big fat gap right here, another gap over here, 3 big gaps. Actually, there's 4 gaps right here. Let's zoom in a little bit. Go to the 1-year chart. So they've broken out of their range, which they were stuck in between roughly 175 and the low end of like 145. I remember when Ashish and I were discussing selling puts like the 120 strike, like to be a sign. And then I remember actually I sold some 90 strike puts back at the bottom over here. There's a lot of premium.
Stupid.
209. Yeah, so that's
stupid.
a nice move. So looking at that for the week, let me pull up the option chain. One sec. So okay, freight. Okay, option chain. Share screen.
So while you're doing that, let me give you guys some unasked for advice. Sometimes the time to buy is when you're really scared. Okay, like what was 120? We were looking at puts. We did some stuff, and then we just kind of like we think it's going to go lower, and it did. It went all the way down to 88, right? $89,
Yep.
right? But the thing about it is, when everybody's scared, you have to ask yourself, is this company going bankrupt? Number one. Number two, does it pay a dividend, right? Because you don't want to be stuck in a company that doesn't pay you anything, right? Worst case scenario, if you're stuck in a company like I'm stuck in Win, okay, until just recently, paid me $4 a year. I didn't care. Still good money, right? What you want to do is you want to find a company that's going to continuously pay you through dividends. And then you need to figure out a way to sell premium against it, covered calls, right? And ideally, you want to sell it above your cost basis, okay? And preferably above your entry basis to add income. But don't get scared when the price is crashing if it's a good company. Understand why it's crashing. If it's general economic stuff, that's the best time to buy. If it's company specific, that is short term, okay? We'll give you an example, Equifax on a scandal, okay? Give you another example, Facebook on its Cambridge data leak, okay? When you see everybody running, put some money in and create a strategy and look for a point on the chart where you say, I don't mind holding onto this for a year and a half, right? If Nick and I had done that, on a lot more stocks in March, he knows that I chickened out of a lot of stuff, which would have tripled in value by now. He caught a few things,
Yep.
but always look at that. So yeah, going back to that 120 on on FedEx, I remember
FedEx.
that.
Yeah, no, well said, and it's true, right? So it goes back to this thing that Warren Buffett says, which is to be greedy when other people are fearful, and be fearful when other people are greedy, right? So perhaps me discussing being bullish today is a contrarian indicator to you guys, which might be that we're near the top, right? Again, I just mentioned those bullish ideas or the bullish thesis on inflation because I had a discussion or a few discussions actually over the past few days that I found pretty interesting, right? Thinking about, what if inflation occurs in the market and we just see it go up and up and up over the next, couple of years, and we see absurd valuations before a crash occurs, right? That's a very likely scenario as well, right? But back to Jose's question about FedEx. So for the week, let me just close one of the charts here. So it broke above 190. Volume is still pretty good overall. You can see that the volume, whenever it's above 5 million roughly, it's you see pretty substantial moves, especially on the green buy side. So we saw some heavy volume over here. There was buying also over here that occurred. Nice volume caused a little pop up from like 140 and change up to 160 and change. So when the volume dries up, that's when you're gonna want to stay away from it. But right now, the volume is still there. Let me pull up the options chain, which I have over here actually already. This is for Equifax. I want FedEx. So for Jose for the week, closing price 209 on Friday. I believe that was
all-time high.
No, all-time high was much higher than that. It was higher. It was at you can pull up the here's a 10-year chart. I'll show you right now.
Oh, 274. Yeah, 274.
Yeah, 274, right? So it had a pretty dramatic decline, right? About 70% into that March low. Now it's already back up over 100% since then, right? So, but it can still keep on running, right? Given that the shifting demographics in the economy, right? Like everyone's ordering things online and across the globe, right? So FedEx and UPS have both been booming. If you look at UPS, it broke out of a tight range that it was in for a long time, right? Like it was between 120 and like 100 for a long time, and now it just smashed through that upside wall at 130-ish or 135-ish, previous all-time high, and now it's at 161. So that occurred in like 3 weeks basically, right? Some massive movement. So looking at FedEx for the week, so closing price 209 roughly. So look at the 210 strike price calls and puts. The expected move for the week would be around $8 in one direction. So upside would be roughly 217, downside would be like 201-ish. And looking at the liquidity here, liquidity is decent. Yeah, it's not bad. The spreads aren't too wide, especially at the money. And it's August expiration, so you have the monthly OPEX, which is this Friday, so not too bad either. If you're bullish on it, I mean, you could do any number of strategies, right? You could do a just out of the money call spread, like a 210, 220, for example, for Friday. You would basically risk about $2.15-17 to make a maximum of 10 minus 215 for argument's sake. So your upside would be roughly $7.85, right? That asymmetry of risk is pretty damn good. You have almost 4-to-1 risk reward, which is beautiful. And then conversely, if you want to trade the downside, you could also trade the downside and say, okay, I'm going to buy the out of the money put, and I'm going to sell the put against it, the 195 put, do a 10 wide spread again. And the midpoint here would be roughly 170. So you'd have 170 risk to make 10 max minus 170, which would be 830. So again, your asymmetry of risk is beautiful on both sides. If you thought it was going to move big in one direction, Jose, and you didn't know which direction it was going to go in, you could also do both. You pretty much be selling an iron condor instead of buying one. And that would essentially give you directional neutrality with risk reward of roughly 2-to-1, because your debit overall would be 170 plus like 215, for example. So it would be around 385. So your maximum upside would be 10 minus 385. So it would be 615 max upside, right? As long as it moved big in one direction down to 195 or up to 220, you would get a nice gain on that position, right? Otherwise, if you thought it was going to be stagnant, you could play it that way as well. Keep in mind the IV is elevated right now. So because of the massive movements in the upside the last few weeks, you could also sell some premium out of the money, which is what Ashish likes to do, right? So if you wanted to to do an iron condor, or if you wanted to like, follow the upper or lower PMs for the week, you wait for an upside move, sell out of the money call spread, or wait for a downside move and sell a out of the money put spread, for example. Or if you wanted to do a strategy all at once, you just pretty much sell, a 5 wide, for example, to the downside. So you're out of the money by about 15 over here. Go 15 out of the money on the call side too. So go to roughly 25, sell that, buy that. And again, your risk reward is going to be terrible, but your probability of profit is going to be very, very high, right? So your risk reward here, you're pulling in a credit of around, like, let's say 45, 45 or 50 cents, for example. Let's say 50 cents for argument's sake. So your maximum credit is 50 cents. Your maximum loss would be 5 minus 50. So it'd be 450, right? So you'd have 1 to 9 risk reward, which is pretty crap. But your probability of profit is very, very, very high on the trade, right? So it's not a bad idea.
Make 11% on your money. You make 11% on your money before your costs. The key thing in selling is just that. Know when to throw in the towel. The problem with people who lose on credit spreads is they don't know when to throw in the towel.
Yep, absolutely correct. Well said, Ashish. Yeah, well said. But aside from that, guys, any more questions at all?
Jose, let me give you 3 numbers for your FedEx: 205.86, 219.92, and 231.06. Those are your 3 closest structure points, right? So if you go back and you look at the chart on a 15-year period, right, and you say where on a daily is the price make, a stop or a change or a pivot or stalls before it breaks, right? These are your 3 numbers that are closest to where we are right now, right? So the break of the 205.86 makes me think, okay, we could be entering into a new range. 219.52, you want to be careful there, right? It's probably not just going to break right through that number. It's probably going to tap it, pull back, test it again. You want to see a break of that for a continuation, or that might be a good place to take a profit. And then ultimately 231.06 would be the next level. And this is just very simple. You just go back on the chart and you look at the price action and you say, well, where did the price, decide that this is an important level? History repeats itself. So go find those spots, and it's all subjective, right? My number could be a little bit off than yours. It's just what you think is subjective on that chart. But it's always good to have those lines drawn and say, when it gets to that number, pay attention. There's decisions to be made. What the decision, that's up to you, but there's a decision to be made.
Yep, and also keep note of the gaps in the chart as well, right? So you have a fair number of gaps over here. Typically, when you see gaps occur, like you see them, so gap over here occurred, fill pretty fast, right? Gap over here occurred, fill pretty fast, right? So gaps typically fill. They act as a price vacuum, if you will. Over here, I don't believe this gap actually filled. So now it's filled though, months later. But
you still have your quote chart up, Nick.
Oh, sorry. I was showing the wrong screen the whole time. My bad. So yeah, I marked the levels that you mentioned over here at 231 and change, and 219 and change, and then there's one at I believe 205 you mentioned too. Somewhere over here.
205.86, yeah.
205.86, yeah. So you have 3 key levels over here, essentially, that Ashish mentioned. But I was mentioning that watch out for the gap fills. So there's a gap right here, gap right here, gap right over here, and a gap over here, right? So you have 4 pretty substantial gaps down to 110. Now again, I don't see any reason for the 110 gap or the 120 gap to even fill. But if we do get a pullback in the broad market, it wouldn't be out of the question to see that first gap over here fill at around, like, what was it, 183.53, right? That wouldn't surprise me, right? Typically you see gaps fill, like you can see that, gaps occurred over here, right? That filled pretty fast, right? A gap occurred right here, it filled pretty fast. Whenever you see gaps occur, like even over here, we filled, months later, right? Obviously, but you see these small gaps occur and they fill right away, right? So keep an eye on that as well, Jose, and trade cautiously, right? Any more questions, guys, before we wrap up?
Thank you, boys.
Did you hear me earlier?
No, I didn't.
No.
Oh, I had my mic muted accidentally, I guess.
Yeah. Do you want to share your Heikin Ashi stuff right now?
Yeah, actually, I mean, I have something that might interest you guys.
Awesome. I'm gonna make you host then.
Yeah. It's not really a whole like. There's nothing really going on this week. It's kind of been bouncy, so nothing's really ready yet. But
Yep.
wait, how do I do this?
I just gave you, I guess, screen ownership, right? Do you have that? Did it show it?
Yeah, I think so. I mean, I
You,
click
you,
share
you need
screen.
to go to Zoom and go to share screen, and then choose what screen
Okay,
you want to share. Don't show your whole screen. You don't have to do that.
okay, so there it is.
Beautiful.
See it, right?
Yep.
Okay, so we'll start from I guess the top. Like Apple's not, over here it kind of looks like it's just consolidating, like kind of forming a bull flag. It's been kind of beaten down. It's not really ready yet to go, but if it does start pushing, then you can. I'm probably going to take an entry. AMD's been beaten down a lot, as you can see right here. Just this is like several hours of selling, but it's still staying in its range. So this is ready too. So it's looking ready to run. Facebook's looking a little weak. Um, I feel like it can go a little lower, maybe, especially with. Um, God, I feel like I remember there was like some news that was pushing it down. I can't remember what it was though. Microsoft is the last one that or no, Microsoft and Nvidia are the last ones that I'm really looking at. But Microsoft's looking kind of beaten down too. Nvidia into earnings. Now I've noticed this a lot. When it's going to beat, it cools off,
Mhm.
right? Like it cools off super quick, and then on beat it just goes like this. For example, like what is it? Applied Materials. This big cool off right here,
Mhm.
and then earnings spike up to 68. But it doesn't matter because um, premiums are still inflated. So um, SPY, it's below the range technically,
Mhm.
but it's not so far down that it's like invalidating a bullish trend. In fact, it's actually cooling down for a higher run.
Yeah.
And I'm tracking TNX too, which is the 10-year bond yield. And this is, I mean, this had a moonshot from zero point 0.5 to zero point 0.7, like in just a few days.
I noticed that. Yeah.
Yeah. So this entire time, it's just been grinding lower, and the market's been grinding higher, and it's been giving me caution to like get into positions. This is what's been worrying me.
Yeah.
But
Yeah.
after this moonshot, and it's staying riding this 9 EMA, like I think it supports that thesis that you have that market's going to go higher. It's just that the market's been consolidating this whole time. It's
Yeah.
been moving kind of flat to having some wild swings, and that's why it's been kind of choppy lately.
Do you check Amazon?
Yeah, Amazon's actually looking pretty beaten down
Yeah.
too.
Amazon, I was looking at it earlier. It looks like it's gonna move like next week.
Mm-hmm.
Like it's been consolidating. It's in a
Yep.
triangle.
So consolidation from like the 20th to, is it the 20th? Am I looking at it right?
Well, you could see it right from the breakout, right? Right
Yeah.
at the beginning of August. You see that big green line
Mm-hmm.
right there. So just use that as your candle, and that's your consolidation period, right from the top of that candle, that 1 day candle to the bottom. That's basically your top and bottom range of your consolidation.
Yeah. So like from beginning of August to now.
Yep. It's been really consolidating inside that range,
Yeah.
right?
And it's
And you can see the previous high around the 20th of the previous month, right? I think it's like the 22nd.
Mm-hmm. Something like right here.
Oh, that was another question. I had a question. I wanted to ask, like, what's the likelihood of some of these other like mega cap stocks like engaging in like stock splits, kind of following like Apple and Tesla's?
You don't know. Nobody knows.
You don't know, but like, what do you think the likelihood is of like an Amazon splitting?
Amazon's last one was like in 99, right?
So why would they split the stock? You have to ask yourself, right? Tesla's splitting the stock because they want more participation by the Momo people, right? And by getting more people to buy it because it's more affordable, it can continue the rage of it being a Momo stock, right? Apple is like the social child of stock market, right? They want everybody to be happy and kumbaya and make some money, right? So
Mm-hmm.
by lowering the stock price, they feel that people can invest in the Apple ecosystem, right? If you own the stock, hopefully you buy the product, right? You make money on Apple, you go buy an Apple product, right? So they want you to own it, right? What's Jeff Bezos' reason to split the stock? He's got to have a motive, right?
Mm-hmm.
He's got to have a motive, right? What's Google's reason to split the stock? In fact, Google did the opposite. Google uh, subdivided their company by creating a parent company. They made that stock super exclusive compared to the Google stock, right?
Yeah.
And
Yeah.
that holds all the voting rights, so they control the power, right?
Right.
So, when you say split a stock, you have to ask yourself, well, what's the motive, right? There's got to be an underlying motive that makes sense for them, right?
Okay. So let me ask you something. Do you think Tesla would have done its stock split irrespective of whether or not Apple did it? Like, do you think Tesla would have just done it, or do you think Apple splitting a stock motivated Tesla to be like, huh, maybe we should split our stock? And now other
I,
companies are thinking like, huh, maybe we should split our stock.
I think the response that you got from Apple's split news
Had an
uh,
influence on it.
had an influence on it. It's not like they woke up one day and say, let's split it, right? And technically, stock splits were done in the old days because it was so expensive to buy a share. So if you bought 50 shares, it cost you more than if you bought in lots of 100 or more than 100, right? So you paid a different commission, right? So people used to stock split because they wanted to make it more affordable, okay?
Right.
Berkshire doesn't split its stock. Did you notice that, right? Why?
Right.
They don't care. Listen,
They don't care.
you
Yeah.
pony up the money or move aside. We don't have time for you, basically, right?
Yeah.
So, but now there's slices. You can go out and you can put $100 and you could get a piece of Apple. So it's no longer really an argument that you're preventing people from getting a stake in a company, right? Because if there's no money down, right, no difference, right, you can buy a slice. Yes, you get a little bit of a marginal difference in the spread, right? But who the hell gives a crap? You can put $200 and you can get 4 companies, $50 each, and whatever it proportionally accelerates, it accelerates or decelerates, right? The price. So it's no longer a matter of being able to participate. So it's, Tesla needs, no matter what Elon says, Tesla needs people, it needs to be in the forefront. It needs to be a Momo stock, right? So that's my personal belief in why they want to reduce the price, right? Because when you're here, okay, when you're here at 1,500, at 1,600, at 1,700, you're constantly questioning its valuation. Okay. Now, when the price is at $300, the valuation hasn't changed, but the average investor is an idiot. Bottom line.
Right.
Okay. And they're like, oh, look, the stock is so cheap.
No, you're right. They see the stock. They look at the stock price. They value the company based on the stock price. You're absolutely right.
So now what happens is they're like, oh, Tesla's only $300. I can put 30 grand into that, right?
Yeah. Yeah.
And this is the kind of psychology that prevails, right? So so you have to take that into consideration. But if that answers your question, I got a question for Rick.
Yep.
What's up?
Go ahead.
Go back to Apple.
Okay.
You said it's not ready. Okay. Granted. What makes it ready? What are you looking for, right? Because you know me. I like to pick at you to learn from you, right? And
right. So what makes it ready? All right. So look at this right here. You'll see these instances happen multiple times. What makes it ready is multiple hours of selling.
Okay. And then I saw that indecision candle.
There's indecision. What you need is some confirmation. Now, sometimes I notice this before it makes a move, it'll kind of fake you out once, and then it can't do it again. It can only do it once, right? Like here, hours of selling, you're waiting, and then you get in here, and then it fakes you out, and it drives it a little lower, but then it can't do it again, and it just goes up. right? You'll see this. You see it on Amazon too, right? Again, multiple hours of selling. This is where trend change happens, and then here you get in. But this is the earnings. So here, if you would have just risked it and said, "Fuck it, I'm getting in for earnings," this would have been the time to do it, right? And then zoot, right? Same. You're looking for multiple hours of selling, and here's another little fake out, right? So like, well, it's not really a fake out because there's nothing tricking you to get in. You're still watching a decision, and then you see it go lower, and here you go. You get in like
Yeah,
here,
but
and then
and you know I'm not picking on you, right?
yeah,
Here's
yeah.
my problem. The time frame is too wide, right?
For the
So
1
look,
hour, yeah.
so you know when you go back and you say, okay, here's your trick, right? And then there's a confirmation, we'd probably be stopped out of it.
You
Do you know
probably
what
be
I'm
what?
saying? We'd probably be stopped out if we entered.
Oh yeah, maybe.
So
Depends, I guess, on what you're risking.
no, listen, you know, whatever the method to your madness is, you're obviously you're knocking it out of the park more than not, right? You know,
Yeah.
so I absolutely want to help figure it out for me, right? You know, everybody understands their thing differently. You've got it. I just gotta get past my
Your inhibition.
hesitation. Yeah,
Yeah.
you know, and at the same time, I hope it helps you kind of get it a little bit tighter. Do you know what I mean?
And there's also, so for continuation, if if it's going like, I guess one could say parabolic, right? I've
Like
realized that
I like the EMA bounces and the crossovers, right?
yeah.
I
So
absolutely
like,
like that.
so here, like you can see it just, end of day, it just sells into the close and then bounce, and then sells into close and bounce, and sells into close. It does that thing. AMD is the most prominent one to look at with this.
Good observation on Apple right there, man. Yeah, that's a good observation.
Let's see, where is it? Let me just
Yeah,
tighten up the
reset
chart.
that chart.
There we go. So you see this right here? Imagine getting in, like this is way under the EMAs. Right? You're just waiting for some good action here. That's it. So you'd get in like anywhere here, really, because this is where the curl up happens, right? You get in here and you're just waiting to do it, or to see the two. So you could get out here, right? But then this happens right here. Sell off into close. I have it at 14:30 because I'm an hour behind. So
Yeah, no, I got you.
so here it meets the EMA, boom, bounce, consolidation. Again, into close, boom, bounce.
But
And it's
what
like the
all those
cleanest
moves?
thing. Huh?
Yeah, I see it. It's clean. You're absolutely right. But it's more of a bounce and a pullback to whatever your orange EMA is, and
Mm-hmm.
then a push back up. Because what I'm seeing, right, over and over again, is that it breaks out, okay, and as soon as you start seeing the wicks, right, all I'm looking at is price action. As soon as you see the wicks start lining up and arching, right,
Mm-hmm.
and you see it go red, what you're looking for is a touch of that bottom EMA. And when it touches your bottom EMA, you're better off taking that risk on a longer dated entry, right? Because I see it time and time again. I see it on the 22nd. You see a high volume push candle, right?
Mm-hmm.
Okay, and then you see the fade, right? And then you see a high volume candle breakout, okay? And then you see the fade right back to the EMA.
Yeah.
Then you see a high volume candle breakout, and you see a fade to the EMA, and go all the way down to like right around the fourth, right? Yep.
Wait.
Fourth.
Fourth right here.
Yeah, right when the red candle is, right?
Mm-hmm.
But, yeah, no. The previous red candle, yeah, right there. And if you see the next day, it taps the EMA, right?
Mm-hmm.
And then you get a high volume candle, right?
Like all
And
the way
on
up
a
here.
on the retracement of that candle, you can go out longer dated, and that gives you a higher probability, right?
It's kind of like
And now,
rolling. Like you take your profit, roll it into the next one.
yep. Now, don't get me wrong. We would have looked to do the same thing before that big downturn, and that would have been your loss. Okay, you would have lost right there because you would have went in on that. But here's the difference. Here's the fundamental difference that might have saved us. There was no green candle with high volume, where in every single other instance, there was a green candle the next day with high volume for the day, right?
Yep.
So,
So that would be
so
this one right here.
well, no.
This
Look at
little
the
one.
previous. Look at the previous three. That's not high volume comparative to the other stuff. Everything was progressively equal or higher volume, right? So
Hmm.
at this given juncture, A, with the move up, right? You've already had a huge move up. Two, with the lesser volume, we would have entered. Don't get me wrong. Let me not try to pretend and say we wouldn't have entered. We would have entered, but we would have lost, right?
Yeah.
And even if we had entered on that, and you can't always win, that's fine. But if you now go back to the end of that red dip, the V-shaped dip, go forward, go forward. Follow the red candles all the way down to the V
Okay.
bottom, right there. Now look at that, right?
This
You
big
see,
volume right here.
yeah, that's what I'm saying. So, you know, on that would have been the EMA trade. That would have just been simply a confirmation of a V bottom, right?
Yep.
And that's probably one of the best high profile trades is learning how to trade a V bottom, right?
Hmm.
Your confirmation candle was that day on the volume, and then on the break of that candle the next day would be your entry, right?
Okay. You want to see something interesting?
Yep, of course.
So there are different ways that you can trade, and Apple's the most reliable for this because it's just, I don't know, it's just what I'm comfortable with. So
No,
I've been
absolutely.
trading 1 minute and 5 minute scalps,
Yep.
right? So if
And
you look at
the
this,
whole point of this is to argue to make us both better and
okay,
figure something out, right? So of course.
right. So with this one, it's more about the 9 EMA and how it holds up in
Mhm.
conjunction with the Heikin Ashi candles, right? So down here, you get 5, 10, 15, 20, 25, 35 minutes of selling, and you
Okay.
dip under,
Yep.
right? So good risk reward tells you that it should bounce over the 9 EMA, right? But you also have the confirmation of these two, plus this is oversold, right? So you can buy in here and get out here. So you go in at 460, get out at 463. The instant the next time it goes below, you can even do that, right? And then it just hovers under for a good while until it finally curls back up. And you could get in here, but it's risky, obviously. It always is. And like I said, it always like kind of fakes you out once, but I'm still testing the 5 minute. The 1 minute's the best for the scalping now. I love the 1 minute. That's how you catch those V bottoms,
Yeah,
right? And it's always
absolutely.
super risky, but you get all this, and then suddenly you get that, right?
The thing about V bottoms that people don't seem to understand is you have to wait for the full confirmation.
Yeah,
And that means you give up
that's the
some.
hardest part.
Okay, that's the hardest part because let me explain to you where you get caught, right? Zoom out of the chart, stay on the 1 minute, but zoom out. And let me see where I can, okay, right, go to the bottom. No, you were right there, say around 12:30,
Hmm.
12:35, right. See that V bottom around 12:35 on your
Yeah.
chart? Nope, that's, I'm
Oh,
looking at your
oh,
time.
I
Yeah,
see, right
right
here,
there, right,
right
right.
here.
So you see how that candle went up, right?
Yeah,
At 12:35, the two green candles, and then it just went back down, right?
yeah.
If you're in a straight option, you're never going to recover, okay? Because you're going to have premium decay and a delta move on top of it, right? You're not going to recover from that period. Never gonna happen. Your premium decay and your delta move will make it so that you're just gonna chase it. The only possible thing you might have is at the right where your candle was at the bottom of that, you leverage up. You go maybe like a 4-to-1 and scalp your way out of it, right? but that's because you didn't wait for the full confirmation of a V bottom, right?
Yeah.
And okay, keep your candle right where you are. Well, you were there.
Oh, right where it was.
Where you are. The next step, next red dip over.
Okay.
Next step. Nope. All the way to the right there. Now you see that. You see that. So the trend is down, and then you see that indecision candle right there. That's
Mhm.
the key. That's your best sign right there. That indecision candle is your money maker. When you see that candle or you see a bottom hammer on a strong descent, okay, that's the V bottom you want, right? Because you
Mhm.
have strong red pressure, and then you have an indecision, and then you have a green candle, and that second green candle came up really nice and high. On a pullback of that was your entry, right? And then your V bottoms, you got to get out of the top of the V. So that's where people also make a mistake, right? They're like, oh, this thing's going to keep on running. No, it's a damn V, right? When you get close to the top of the V, get the hell out, okay? Because it's a scalp.
Hey,
Okay?
mind if I show you something real quick
Sure.
that I found interesting? So, remember that day that Facebook ran super hard?
Yep.
Okay, so there's days like this, and I always find this interesting. Whenever the first one wicks, if the second one, wicks to a high enough level, you can just get out right there. You don't even have to wait for a sell trigger. You just get out, and then you just see what happens. Like I got out here at 263 that day on Facebook. It ran higher, but I mean it stayed in this range and it was already disconnected super hard from this. Right. So scale here, scale here, scale here, and that's it. Like
so with the 1 minute, right? Your trading timeline is 15 minutes. You're absolutely trying to play basically a ping pong game from the bottom of a 5 minute candle to the top of a 5 minute candle.
Oh,
right?
This is the 1 hour.
Well, that's even better, right?
Yeah,
so
I'm just saying that like whenever whenever it wicks like that, whenever you don't have like normally I'd wait for like this shit to happen, but at that point I've already missed out on $10 worth of profits. Something similar. Like it stays in this area for like 1, 2, 3, 4 hours.
Yeah. Like, so there's plenty of opportunities.
Yeah, it's just optimizing the strategy, but just I figured it'd be interesting to show.
Scalping is a lot of fun.
Yeah.
Okay, but sometimes it's like drinking soup with a fork.
Yeah.
A lot
but anyway,
of work, but not much pleasure.
Yeah, but anyway, AMD is really the only thing I'm looking for to kind of curl up. Everything else is just gonna. I feel like everything else is just gonna trade sideways. It's either gonna go up without being settled, or it's gonna trade sideways.
Yeah. You think tech is gassed right now?
AMD is going to 100. The question is when.
Yep. So is ATVI. ATVI is like beaten down, super hard.
That's a great setup right there. Even
for no reason. It's super beat down. Like, look at this. It got completely crushed from 86 to 81 to 79.
Where is it at? It's at 80 again?
It's at 80-40, yeah. It got crushed.
I might go long this week, actually.
I remember I was getting worried about being assigned at 68. I wish I was assigned.
Yeah. So, I mean, this is a great long setup. It's just you really got to pick your moment.
Guess who's going to be selling put spreads on ATVI this week?
Yeah. You. SLV is also SLV, and I think GLD is also pretty beat up. Yeah, they're both beat up. I mean, GLD can fall a little bit more, but
so here's my thing on GLD, right?
Yeah.
He brought it to my attention, Joe, right? And he said, look, he was looking at a leap, which I was looking at. I even priced it out, but it never got to $12, right? However, I think there's a possibility it gets down to like the 168 area. Why do you think about that?
168 puts it right here. It just eliminates the run that we've had.
Yeah, and why did we have the run? I'm asking you, right?
Oh, why did we?
Yeah, well, that would be the reason why it gets eliminated, right? Gold is very simple. Gold trades based on all this news about money, right? Different types of money, right? So why is gold? It's not like gold is more in demand. Okay, I've traded gold like you wouldn't believe. Everybody goes, there's not enough gold in the world. Bullshit. There's so much gold. Okay, gold moves because central bank. In the old days, it was because of central banks, right? Uh, Nowadays, it's based on a safety. Okay, people run into it because they believe it's safer. You can't you can't protect your money in a better way. These are some of the reasons why gold runs, right? So you had this run up, okay, from the 20th, okay, to August 10th, right?
Yeah,
Give or take, right? Now,
that's a
forgive
huge
me.
run.
I used to know gold inside out. Just take my word for it. I'm a little tainted with gold because I used to trade gold every single day in metric tons, okay, for a large part of my life, okay? I was a bullion trader, okay? So when I left it in, I think it was 99, 2000 time, right? I stopped looking at it. I mean, I just, with a vengeance. But I'll tell you this much. The gold moves because people want it as a security. Okay, so this runs up because there was all these problems with currency. Okay, the USD, inflation, the devaluation of money, too much printing of money, all of this nonsense, right? As people get comfortable, gold will retrace. I'm not telling you it's going to fall off the face of the earth, it's going to retrace. So I'm thinking, right? And I got to go back to my old ways and do some research again. But I think 168 was a number that intrigued me. Do we get there? I'm not sure. I'm rusty on gold,
Yeah.
but that's a number that says, you know what? Let's go there. Let's consolidate. Maybe it's not 168. Maybe it's 172 before we move up. And why do I think we're going to move up? Because we're going to keep printing money. And sooner or later, you're going to see inflation kick in.
Yeah, I mean, pull up gold again. Like, can you pull it up on like the long, like pull up like weekly candles or whatever, and just pull that
Sure.
thing back to like 2011? Like the thing's forming a massive cup and handle pattern,
Oh, I see.
right? All you gotta
Oh,
do,
wow.
just wait for the pullback, wait for the handle, and it like based on this chart and everything you've been saying about gold and everything that the central banks
Let
are
me check
doing,
the
like
daily.
it
Actually,
looks like the thing hasn't even. It's still gonna break out
Well, no, central
above
banks are
that
done.
level.
Central banks are done. You see, in the old days,
Jesus.
central banks kept gold and they pegged their currency against gold. The
Right.
U.S. killed that, right?
In
So,
1971, yeah.
well, forget about it. We'll go back into the 80s and 90s, okay?
Hmm.
I used to have access to a vault underneath the Wall Street Bull, okay? I mean, it took me special permission to get into that thing. And literally all you saw was names. There would be plaques of countries, right? And there would be 2,000 pound, 2,000 ounce bricks of gold. And as banks and countries traded, they
Hmm.
would just move these goals left and right. You
Hmm.
know, those things are disappearing because the banks don't need it.
Well,
They're
what do you
quietly
think
selling
about
it off.
Berkshire? What do you think about Berkshire's 13F filing?
I didn't read it. I still got to catch up on a
He's
lot of it.
selling financials and buying grocery stores and gold mining stocks.
So why grocery stores? Did you go to the? This is something you're gonna love. I love when people go. There's no inflation. Screw
Hmm.
you. Go buy some milk. Go buy some eggs.
Yeah,
Right
yeah,
now, grocery store, my grocery bill has gone up since March. Okay, now you're gonna come and tell me, oh, it's because COVID cut production. You
yeah.
can't import shit. Okay,
Hmm.
screw you. Okay, it costs more money no matter what you call.
Yeah.
Now, financials. Well, guess what? It costs me more money, right, today to own Microsoft than it did 3 months ago. Cost me more money to own Apple or
Right.
Amazon. Well, not Amazon, but a lot of stuff. Zoom cost me
Hmm.
more money.
Wayfair.
Wayfair. Don't even start. You know, I tried to tell Nick, just put a little money in Wayfair. He wouldn't listen to me. He wouldn't listen to me, right? Nick would have been retired by now had he listened to me. But we won't bring that up. I told Nick we won't bring that up anymore.
We get your point. Yeah.
But,
there's inflation in asset prices along with
and
consumer goods.
Ultimately, you know, Bitcoin has eased the pressure on gold. If there was no such thing as Bitcoin, you would have seen a much bigger effect on gold. You really would have. But it's kind of stupid, right? And you have to understand something. There's traders, and traders are there to take your money. They're not, you know, market makers aren't here to facilitate a trade. They're there to make money. Okay, so you know, I used to when I used to trade, my broker also was the broker for the mines, and he had to be really careful because I'd be like, all right, I'm gonna go short 15,000 ounces, and he's like, sheesh, why don't you call me in an hour? And I'm like, fuck. Somebody's about to, you know, sorry, opposite. I was about to go long, close my short position, right? Call me in an hour. I'm a little busy. You know, later on, I come to find out the mine is ready to sell a shitload of stuff, right?
Yeah.
Trading is all about, you know, somebody who has better knowledge than you, you know, who's got
taking
an edge.
advantage of you.
They're going to pull this thing back because they need to reload. It only makes sense. Only makes sense, right?
Yep.
But I'm interested, especially, I wouldn't buy it. I would probably buy options on it because I want to limit my downside exposure just in case I'm wrong. Because, you know, if you're wrong, you're going back to 110. I guarantee you, if you're wrong, right? And just look at the chart right here. You could also call it a double top. You can call it a cup or handle, or you can call it a double top.
Well, one cool thing to look at actually,
the top.
and I had a discussion with one of my buddies a few weeks ago, and we were discussing Bitcoin versus gold, right? So we discussed how much did gold decline in March when the market plummeted from February to March, and how much did Bitcoin decline? If you can pull up the chart on Bitcoin versus gold over the past few months, Rick, just to show like how Bitcoin did during the crash. So Bitcoin dropped pretty substantially during the crash, right? It went from, I think, around 10K down to about, what was it, like 5K or so, or a little bit lower than 5K?
Like 4, tapped like 4.
Yeah, about 10 down to about.
It had a huge wick on that bottom. If you
hold on.
Even if you
look at that wick.
It's 5.
Yeah, so
jeez, it's down to 3K.
So if you compare, so people that are saying that Bitcoin is a safe haven, right? Like this is the discussion we had a few weeks ago on a nice hike, right? And he said, how much did Bitcoin drop? How much did gold drop? And so I pulled up my phone. I said, okay, well, Bitcoin dropped from about 10K to about like 5K, notwithstanding the wick. So it lost about 50% of its value when the market plummeted, right? And then pull up gold again and show how much gold declined, right? Gold declined, I think it was around like 15% from top to bottom before that crash. So it was what? It was at like what was GLD at? 155 or something like that? Or
So top is 158-ish, almost 160.
And the bottom was like 140.
Yeah, about 140, 135.
So basically, Bitcoin lost like more than half its value, whereas gold lost about, like, let's say 15%, factoring in that wick right there, right? So the difference in safe havenness for those assets, and we discussed this, was, and he said to me, because, and the reason why we had the discussion was because he said that one of his friends is going to put his entire net worth into crypto, right? And so I said that's a terrible idea. He said I agree. And then I said, listen, I'm like, what would happen if gold? If the market were to crash, gold versus Bitcoin, right? And we looked at gold and Bitcoin, and we said, okay, wow, like that's insane that Bitcoin lost more than half its value in the market crash. Meanwhile, gold lost about 10, 15% maximum, right? So it shows right then and there is a perfect case study as to why Bitcoin is not a safe haven asset. Because when shit hits the fan, so to speak, right? Bitcoin gets sold off with everything else, whereas gold didn't as much.
There you go again, Nick, using common sense. No,
Yeah.
no, but here's the other thing that you have to understand. The new generation doesn't understand the value of gold compared to Bitcoins. And again, I'm dead serious. Common sense will hurt you when you trade, okay? Because what's logical will not happen because the market doesn't trade logical.
Yeah.
Okay, so you have to gut check your logic and you have to look at what the chart tells you and what the fundamentals tell you, right?
Yeah.
Because, there's absolutely no reason why Wayfair should be where it should be. Okay, there's absolutely no reason why Zoom should be where it should be.
Children are expensive, dude. That's
Trade
like
the charts.
valuation right there.
Yeah. But you have no problem popping out a whole litter, do you?
Hey, but on the gold versus Bitcoin thing, gold doesn't really move all that much normally, right?
No.
So like volatility is very low, whereas on Bitcoin volatility is extremely high.
Here's the trade you want to do on gold. When you get a good pullback on gold, go ahead. Can you pull up the option chart on this or not?
I haven't tried that. I don't think I can.
No. Okay. Listen.
I can if you want to.
No.
Yeah.
I'll tell you what it is here.
Okay.
If you you just guys got to take my word for it. Let's just say that gold pulls back to 170. Okay. Try looking at a 190. What did gold close at? 182. So if you look at
I can see
trade
right now if you want. GLD.
Yeah. GLD. Look at the January 22 contracts, right? But what you want to do is you want to look at, let's say, the 100 contract. Sorry,
The 100 or the
the 200.
200, yeah, because we were discussing that a few weeks ago, right? So right now that's trading at 13 on the nose, midpoint.
Right. So if you wouldn't get it for 13, right? If it pulled back to 170, you could say that you would get that for about
Get it for about 9 at that point.
Yeah, I would say 1050, right? If it was me, but anywhere from 9 to 1050. So you pick that up.
Yeah.
Now you have exactly, 523 days. Let's just say you have 500 days. 500 divided by 7 gives you about 71 weeks. Okay.
Mm-hmm.
Your break even would be 210. So you can absolutely sell 210 calls without any risk to the upside to eat away at your premium. If you're a little bit more gutsy and you have a little bit of experience rolling calls, you could sell the 200 calls.
Yeah, same strike.
And just continue. Yep, same strike. The problem is you could lose the value of the premium, so you have to constantly roll out. But just to give you an example, let's just say you go out a month, right? September, which is 33 days out, and you look at the 205 calls, right? I'm just trying to give you guys some distance. You're going to get 50 cents.
Yeah.
50 cents, right?
Mm-hmm.
Well, 50 cents, go back to that 71 divided by 4, that's 17, that's about 18 weeks. 18 times 50 is about $9. Right? So if you're smart about it, let's just not say 9, you could probably knock off $5 or $6 off the cost of your lead without being in jeopardy of risk. And if it pumps up, you can go out further, right? And maybe sell $1 premium, because the name of the game is to first get back your cost and at the same time make some money. So that would be an example of a trade. But now you guys need to take that trade and make it your own.
Mm-hmm. It's not a bad idea at all, and factor in the election as well. There's an IV spike on gold for the November expiration, so you get quite a bit more premium for that expiration date. So if you manage to, not be assigned at all on the September, October expirations, and then you go to November, you're gonna get that fat premium. If you spike in GLD before that, and say you're unscathed on the September October expirations, and you pull in $1 premium on, like, let's say 9 or 10 risk conservatively, if you're buying that the 200 strike call, right? Then you pulled in 10% already. Your upside is now 10% more, but you can sell that November contract probably for around $1, maybe $1.50 out of the money, and pull in an additional 15%, reduce your cost basis from 10 down to around 750. And then you still have an additional, I guess, year and a half, or year and 1 month, I guess, right? Because you'd be in November 20th, 2020. So you have about a year and a month. Not bad at all.
All right, guys. Well, I gotta hop off.
Yeah, we
Me
should wrap
too.
it up, guys. Yeah. So yeah, Rick, if you want to give me control again, I can just close the screen because I'm recording it, right?
Yeah.
Awesome, man. Appreciate that. All right, guys. Well, great session again. As always, I appreciate the chat, Rick and Ashish and Frank and everyone else who contributed. Have an awesome evening, guys, and we'll be on voice chat bright and early tomorrow morning.
All right.
If,
See you later.
if you guys are in the group and you don't jump into the chat, at least when you open, you're really doing yourself a disjustice.
Yeah, you are for sure. I definitely agree.
See you guys later. Thanks, Nick.
Yeah, have a good night. Thanks, guys.
See you guys later.
Good night, guys. Thank you.
No problem.